upside or on the downside. The other pocket that I'm watching out for is the oil marketing companies. They open with a spike but are off from the highs of the day as well. There is an important news that has come by, and that's the LPG compensation that the government has announced to be given to oil marketing companies, 30,000 crore rupees in terms of LPG dues. This is, of course, lower than the 41,300 crore rupees, which is pending till date. Nevertheless, it is a positive for these stocks. However, it is unclear whether this is a one-time grant for the remaining losses or they will be compensated as well. So that remains to be seen. For now, Jeffrey says that they estimate an upside of 29 to 42% on EBITDA for FY26 and 38 to 70% for profits. And this is assuming that the compensation is fully paid by in FY26 itself. ICICI Securities says that LPG compensation is a material boost to fortunes. It helps offset margin worries in FY26 itself. Morgan Stanley says they prefer HPCL and BPCL. It could boost FY25 earnings by 75%. That deleveraging could happen by 12% and consistent return on capital employed between 14 to 15%. But there is a downside risk if fuel prices are cut. That is something which would mean under-recoveries in the other part of their business as well. UBS says that payment is equal to 74% of their FY25 dues, 62% of dues till date. That is 41,300 crore rupees. It's around 8 to 16% of the book value, June 2025 book value, and equivalent to 6 to 9% of current market capitalization of all these companies. So a definite positive, but the stocks have come off sharply from the highs of the day. So to understand that, let's get in Nilesh Ghuge, who is the institutional analyst at HDFC Securities. Nilesh, good morning. Thank you so much for joining in. First up, what do you make of the compensation that has come by? Do you think the companies will see a major change with just this, or they need more in terms of compensation?
Yeah, hi, good morning. So, as you mentioned that already they lost about 41,300 crore in FY25, and this 30,000 crore is not sufficient to compensate for the last year's under-recoveries. Still this year also, till date, the company are making losses on LPG per cylinder in the range of about 165 to 170 rupees per cylinder on their subsidized cylinders. So these are not adequate, but still I will say it's a slightly positive because at least they are getting something to compensate, some compensation out of their 41,300 crore loss last year. So that's the positive part out of this.
Nilesh, as you said that, it's good, but it's not adequate. So do you think this is going to be a one-time grant, or will we see continuing support from the government? What happens to the balance 11,000 crore of under-recoveries, which is still pending?
Yeah, there is no clarity as we speak. But in my opinion, government will compensate in due course of time. But it will not, if you look at the current compensation, it is not adequate. So in due course of time, they will compensate oil marketing companies, not through direct subsidies, but maybe through another way to compensate, to earn them some marketing margin or something like that.
You know, Nilesh, there has also been a cut to the number of LPG cylinders under the Ujjwala Yojana. Does that do anything to offset any potential further loss that could have happened from the under-recoveries? Or even that is not a very meaningful step to offset any further loss that could have come across for these companies either?
Yeah, this will definitely help. On top of that, if you look at the step that Ministry of Petroleum has taken in April, on 8th of April, they already raised prices of cylinder by 50 rupees. At the same time, the benchmark Saudi prices, the LPG prices, have already corrected from the peak of about $630 in December, January to now around $430. So already they have corrected. So these 2-3 things will definitely help oil marketing companies to cut under recovery in FY26.
Nilesh, what are the current marketing margins for these companies that we are seeing right now? Do you think there is a possibility there could be a fuel price cut?
I do not see in immediate effect any cut in the marketing margin. They will continue to earn decent marketing margin. Government may allow them to earn marketing margin.
If you can quantify, what are the current marketing margins on both petrol and diesel, and the average as well currently?
Yeah, our back of envelope calculation indicates that it's in the range of 8 to 10 rupees on petrol and diesel, in that range.
And what would your top picks be in this space? What is something that we are watching out for? Because we are looking at refining capacities globally. We are seeing a lot more supply that has come by. Singapore GRMs did see an improvement, but that's not something we saw in HPCL's numbers as well this time around. For IOCL and BPCL, the numbers are yet to come. What is one important thing that investors should be watching out for in FY26 when it comes to OMCs?
Yeah, we do not see a significant jump in refining margin, but oil marketing companies will continue to gain on the marketing front. That is a positive for oil marketing companies. Yeah, you are right. They already increased the capacity, particularly the HPCL expanded their capacity, and that will boost their EBITDA and PAT in going ahead. But in the space, oil and marketing, in the oil and gas sector, we are positive on CGD compared to oil marketing companies.
And in CGD, you like both IGL, MGL, or you have a preferred pick?
Yeah, I prefer MGL over IGL. Yeah.
Okay. Thank you. Thank you very much, Nilesh, for joining in. Get into a break on the other side. We'll put the focus on crypto market. Manisha will join in on the other side.